What if I told you that right now, today, March 18th, 2026, a 20-mile wide strip of water is quietly rewriting the rules of global money. Oil prices have exploded past $100 a barrel. Tanker traffic through the Strait of Hormuz has collapsed by 70%. And Iran has just made a move that hasn't been attempted in over 50 years of modern financial history, offering to reopen the world's most critical oil choke point, but only if you pay in Chinese Yuan. Welcome back to Silver Signals, everybody. I'm your host, Yali Jiang, and this channel is where we cut through the noise of mainstream financial media and give you the real picture on precious metals, currencies, and the global forces that move real wealth. If you haven't subscribed yet, hit that subscribe button right now, because what is unfolding in the Middle East is moving fast, and I'm going to be covering every single development as it happens. Turn on the bell and let's get into this. On February 28, 2026, the United States and Israel launched coordinated airstrikes on Iran, Operation Epic Fury, targeting military facilities, nuclear sites, and leadership, and Iran's Supreme Leader Ali Khamenei was killed in those strikes. Within days, Iran's Islamic Revolutionary Guard Corps declared the Strait of Hormuz effectively closed to vessels from the US, Israel, and their Western allies. Tanker traffic didn't slow down, it cratered, with a 70% drop in maritime transit and over 150 ships anchored offshore, too afraid to move. And here's the number that should burn into your mind. The Strait of Hormuz handles roughly 20% of all seaborne oil in the entire world. 20% gone, just like that. Brent crude surged past $110 a barrel within days, and Goldman Sachs warned that if the closure continues, inflation becomes a permanent problem. The US dollar index crossed 100 as investors flooded into dollar assets for safety. Yet at the same time, the Chinese Yuan is quietly holding its ground. The USD CNY rate sitting at 6.88868 as the People's Bank of China actively manages that rate through daily fixing. Every other Asian currency is wobbling, but the yuan is stable. That contrast is not accidental. The Petrodollar system was born in 1974 when Saudi Arabia and the Gulf states agreed to price all oil sales in US dollars, and in exchange, America provided military protection and economic access. Every country in the world that needed oil, which is every country in the world, suddenly needed dollars to buy it, creating a self-reinforcing loop where nations bought US treasuries to hold dollars, keeping American interest rates low and spending power artificially high. This is why the United States can run trillion-dollar deficits without immediately collapsing. The world has to hold dollars because the world runs on oil, and oil runs on dollars. Now, Iran has just proposed breaking that loop, not in theory, but in practice. A senior Iranian official told CNN that Tehran is considering allowing a limited number of oil tankers through the Strait of Hormuz, but only if cargo is settled in Chinese Yuan, a model I'm calling the Petroyuan gateway, reportedly already tested on March 15th. Iran is effectively creating a two-tier shipping system. Dollar ships stay out, yuan ships get through. Japan, South Korea, India, Pakistan, countries that get 70, 80, 90% of their oil from the Gulf, are being squeezed into a choice. Pay in yuan and get your oil, or stick with dollars and scramble for alternatives that don't exist yet at the scale you need. That's not a small financial decision. That's a civilizational pressure point. On the surface, the dollar looks strong, the DXY sitting around 130, because when geopolitical risk spikes, money flows into dollar assets, and the Federal Reserve may have to hold rates higher for longer to prevent energy-driven inflation from running away. But zoom out, because the yuan, while slightly softer on paper, is actually outperforming most of its Asian peers right now as the PBOC holds the line. Countries that were considering the yuan as a strategic reserve option are now being forced to seriously hold yuan balances because they literally need it to buy oil. Forecasts suggest the yuan could strengthen toward 6.80 to 6.85 against the dollar by end of 2026. That's not a currency in crisis. That's a currency being structurally elevated by a geopolitical crisis. It didn't even start. When the Petrodollar system was created in 1974, gold went from a fixed $35 an ounce to eventually over $800 as the world renegotiated what money even meant. And we are at a similar inflection point right now. When two major currencies are in open competition over who gets to be the unit of account for the world's most critical commodity, what fills the gap of trust? What do nations, central banks, and individuals hold when they don't fully trust either side? They hold gold, they hold silver, the assets that no government can print and no sanction can reach. Central banks around the world have been buying gold at record pace for 3 consecutive years, and that trend was already in motion before Hormuz. Gold shipments got disrupted when flights out of Dubai were grounded after the conflict broke out. And in India, prices swung from a $50 discount to the London benchmark to a premium within days, exactly what happens in the early stages of a monetary reset. Silver tends to follow gold with a lag and then overshoot, because silver carries both a monetary role and an industrial role, and industrial demand isn't going anywhere. The energy transition that China is racing to accelerate, solar panels, electric vehicles, grid storage, consumes enormous amounts of silver. The same geopolitical crisis, reshaping energy currency flows, is simultaneously accelerating the green energy build-out that needs silver to function. The Strait of Hormuz is not just a shipping lane, it is a battlefield between two monetary systems. The dollar, backed by decades of inertia, military might, and reserve currency status, and the yuan, backed by the world's largest manufacturing economy, and now potentially by the keys to the strait itself. Even if a ceasefire comes tomorrow, this crisis has planted seeds of de-dollarization that will continue to grow as countries that were on the fence about building yuan reserves are no longer on the fence. The financial world is being repriced in real time, and the people watching this video right now have a genuine window to position ahead of the crowd. The dollar will survive this in some form, but it will be weakened, structurally, incrementally, and as that weakening happens, gold and silver stand to benefit more than any other asset class on Earth. If you're sitting on the sidelines wondering whether now is the time to start building a position in physical silver or gold, you don't have to go all in and you don't have to panic buy, but you should be paying attention. You should be watching this space, and you should be here on this channel as this story develops, because I promise you it is going to develop fast. If today's video connected dots you hadn't connected before, please hit the like button, subscribe if you haven't already, and share this video with someone in your life who is watching their purchasing power erode and doesn't yet understand why. Drop your answer in the comments. Do you think the Petroyuan can actually replace the petrodollar in our lifetime? I'm Yali Jiang. This is Silver Signals. The signals are loud right now. Make sure you're listening, take care of yourselves, take care of your wealth, and I'll see you in the next one.